Good morning. This is Tim Lee, founder and CEO of LendAPI. Today we have a special guest from FinWise Bank, FinWise Bancorp, Simon. Really great to have you on this podcast. We finally made it to have a proper bank to join our podcast. That said, before we start, there's a couple of statements I want to read for the audience. The views and opinions expressed by today's guest, Simon, are they of their own, do not necessarily reflect the official policy position or financial endorsement of FinWise Bank, its affiliates, and or LendAPI. Nothing discussed today constitutes financial investment or legal advice. Also, LendAPI and myself does not have any holdings of FinWise Bank or their stock or equity. Currently, we don't work with FinWise Bank, which is a shame, but that's okay. I just want to make sure that those are all properly disclosed for our audience. That said, Simon, welcome. Before the show started, you're somewhere exotic based on American standards. Where are you? Where are you today?
Based on American standard, for me, it's just called home. I am recording this from the sunny south of France.
My word, yeah, it's a dream. I think everybody wants to go vacation south of France. So, what was it like growing up there, Simon?
So actually, I grew up in Paris, but I spent all of my summers growing up in the south of France. Look, it's for me, to everyone that I speak to, everyone is like, "You're so lucky, you get to go to Paris so often, or you get to go to the south of France so often," and it's just
Sure.
home, right? That's kind of where I spent my childhood, where I get to be funny in my own language, and that feels really, really good. But since moving to North America, before the US, I was in Canada. I definitely have a renewed appreciation for the country and the culture and the architecture and all of those things. I think I
Okay.
do tend to look at everything through those American eyes now. So no, it's fun. It's fun to get to be with family for a bit.
Yes. Well, the running joke is that your country have parking lots older than our country, so there's a
That
lot
is
of
true.
history and culture there
That
in France.
parking lots and a
My
bunch of other
wife.
things probably are way older than what we have in the States.
There you go. We were tight. We're bros, back in
Mhm.
the 1800s and 1700s. But
Exactly,
my
exactly.
wife is French Canadian, so she speaks French in that Canadian way. So when we go to France, people are like, "You're from Canada, aren't you?"
That
I can't tell.
there's a funny saying. So actually, I went to school in Quebec. I went to McGill for college.
McGill
Um,
University, yes.
yeah, and there's a very funny saying, and it is that Quebec and France are two countries separated by the same language.
Uh, that's right. Quebecois are very independent. You go across the border, you might as well be a different country.
A hundred
We
percent.
did a little bit of a coastal visit last year with the kids and all that stuff. It's built differently. The people are a little bit different, very friendly. The architecture and everything else looks out of this world. It doesn't look anything like North America. So,
That's true.
and yeah, and McGill University, that's like the MIT of Canada, isn't it? Or
The
I'm
Harvard of
getting that
Canada.
wrong.
It's
Harvard
it's
of
the
Canada.
Harvard of
That's
Canada.
exactly right.
It's funny. I went to school. I started McGill right when I think it was a New York Times article that came out and called it the Harvard of Canada. So went to
Yes.
school that year or that summer, and everyone was buying those T-shirts, with the McGill logo, and then the subtext was the Harvard of Canada.
Harvard,
But
Canada.
yeah,
It is.
it
It is.
it was a fun experience for sure. It was my first step in North America. Kind of felt good to have the safety of French, right? You kind of, I was very young. I was 16 and a half when I went to McGill. So I was like, it's good to
Right.
have the safety of French if anything happens. And then kind of immersing myself in that North American collegiate mindset. It was a fun experience. I was in Montreal a lot. I was in Montreal for half the week, and I was in New York for the other half of the
Hmm.
week because I was working at Cross River at the same time that I was going to college. And
Right.
that is how I made my first steps into fintech.
Right. Yeah, I mean, you study finance at McGill, right? Arts and finance. So that's a perfect fitting. And of course, Cross River Bank is a very respected bank out there on the East Coast. Very well. What was what was the most shocking fact when you arrived in North America, Canada? Were you able to get by with French only, or did you have to be forced to learn this awful language that I speak here?
No, look, it was no, it was very easy to get by with French. Not that I didn't speak English when I got to Canada. I was already speaking English very, very well when I got there. I think the most shocking thing was the way we look at education. France being France, the country of the arts and the country of literature, and loving to tell anyone that we're the country of human rights, is very focused on making very well-rounded individuals. So now to go into a lecture of the French educational system, but when I was in the French educational system, it's changed a little bit since then. You had to choose a curriculum, and there were three available: literature, science, or economics. I went into science. That's what generally the good students did, right? You went into the scientific track. But even while being in the scientific track, I had to take history classes, geography classes, Spanish classes, English classes, French, literature, philosophy, all of those things. And then you get to a North American school and you realize that we're not necessarily looking to make well-rounded individuals, but we're looking to make experts in their fields, right? We're looking to make the best of the best in one specific vertical. It has pros, it has cons, right? Like in my day-to-day life, I'm super happy to have had the French educational system. I can
Right.
debate, Descartes and all of those philosophers. But at the same time, I'm very happy that I went to the North American system where like I can go in
Sure.
depth about very, very specific topics, which you don't necessarily
Yes.
get through the French system. So yeah, I think it was the most shocking thing probably, but one that I
Yes.
expected.
We we're a very capitalistic society. Everything's got to be commercialized. So even our education system needs to have outcomes, right? And every school is measured by that.
Yes.
The other extreme is if you look at China, right? They eliminated, 10,000 different degrees that aren't, you can find a job, in that kind of a sense. That creates a different type of human. I totally get it, but I'm glad that you have the best of both worlds.
Yeah, no, it was fun. I look fondly on my educational years for sure.
Yeah, love it. What a great experience. I've been to McGill University's campus. It's like it's a beautiful place to be. Nothing like what we have here is just a concrete jungle. The architecture, the layout is very conducive for that kind of a development. Well, let's talk about fintech real quick. You've basically spent your entire career in fintech. At a couple of really pivotal moments, just from your personal perspective, individual perspective, is fintech still relevant today?
Fintech is 100% relevant today.
Mm, mm,
We live with fintech every day. No matter what socioeconomic group you belong to, no matter what educational group you belong to, everyone uses fintech. And it's funny because when people hear fintech, they expect something extremely complex, right? Some kind of very vague concept that they can't grasp. And it's when you tell them, well, Venmo is a fintech and Cash App is a fintech, they're like, oh yeah, that's right. So yeah, no, I think fintech is more relevant than ever. I do think there's definitely some forces being applied to it right now that's kind of reshaping the industry. Not to fall into cliches, but AI is definitely one, right? AI will
sure.
most likely change the way we interact with our finances and the way we interact with financial products. I think there is definitely the pressure being applied of what's going on with the regulatory world, right? We were very clear on
Mm,
what regulations looked like prior to the Trump 2 administration. Now it's a little bit of a stab in the dark, right? You don't really know what's going to be enforced. You don't really know what's
right.
not going to be enforced. So yeah, it's and to go back to AI, ultimately, I do believe that AI will change the way we interact with our devices, right? And our devices is where we use fintech. So how will
Sure.
the industry get reshaped by all of this is going to be very interesting, and I think it's going to be happening very quickly, right? I don't think this is like a
Right.
a very far in the future type of thing. I think in the next 3 to 5 years, we'll know how that has changed the way we interact in our financial lives.
Right. With your previous background at Crossover and your current position here, you probably work with, I don't know, 200-300 fintechs by now, right? So really worked with them. From my personal perspective, there's like two dichotomies. There's fintechs that are serving, I guess, the upper middle class or upper class of people, and there are fintechs that are, I want to say, have a wave a flag of serving the unbanked, the underbanked, whatever the
Hmm.
terminology is, right? It sounds offensive. What are you seeing? What are some of the things, products out there, let's not name names, that are truly sort of uplifting those that don't have the information or that pathway to financial success and things like that? Are there any fintech product out there that you said, wow, this is actually really cool, out of all the things that you've seen out there?
It's interesting that you ask this question because it's actually one I ask myself very often, right? With the underbanked, or what we generally call the subprime population, right? We very much have a ton of tools to cater to their short-term needs. Now, like if you just type, low credit score loan, like you'll hit hundreds of hits on Google, right? Um,
Right.
and those are expensive loans, but they actually do help, right? It's a funny little anecdote. Before we went into the world of subprime at FinWise, I had my grievances with it, right? I again, coming from France, I come from a country where the usual rate is 8%. So now I'm being presented with interest rates that are 60%, 70%, 100%, 199%. Like, what are we doing here, guys? Like, we're robbing those customers. And then you dive
Hmm.
into the math, you dive into the credit risk, but you also dive into the customer stories, right? And you realize that those are products that have a very tremendous impact that you can feel, right? And that those customers feel in their lives. I think one story that I remember very, very distinctly was this woman that took a very high interest loan, one that I think most of the listeners here would never have to get. And she was saying that she took the loan because she needed to pay for a babysitter to be able to get to a job interview, job that she ended
Oh
up
my God.
getting, improving her financial life, and now kind of graduating out of this subprime world, right? So
Mm,
that is how those products are helping. Those short-term
right.
financial needs is not something that we need to look down on, especially again, people like us coming from like the near prime, prime, super prime type demographics, they are actually helping customers in their lives, and it's almost a byproduct that their financial lives improve, right? It's what
Right.
that money helped them to do that ends up helping them in the longer run, right?
Mm,
Like when we think of the underbanked, or at least that's what it was at the very beginning of fintech, right? When we're talking about the underbanks, we're like, oh, the people that don't have access to the financial system. Everyone can go open a bank account. If someone wants to go open a bank account, they'll walk to a branch, they'll go online, they'll open up a bank account. If they don't have one, it's that they don't want one, and you're not necessarily going to capture them. The real underbanked are the ones that cannot get access to financing or that do not have enough cash flow to support their financial needs, and that is to me why the lending side of the underbanked is a lot more interesting than the deposit side of the underbanked.
what would have been that lady that we talked about that really need to borrow some money to get a babysitter so she can uplift herself and find a real job or a job? What would have been her options had it not been
She
a lender that catered to her needs? What would she do?
So you see a few pathways, right? Unfortunately, the most common one, again, without trying to fall into the cliches, is that it's someone that's going to say, "Well, I just cannot go to my job interview," right?
Mm,
And end up kind of getting stuck in that situation and this continuous loop of bad financial health. You have the luckier people that have a community and a system that they can rely on and that will step in and help. right? That is something that you see in certain demographics. There's even certain demographics that kind of pool the money from the community to help people in that kind of situations, right? Sometimes it's a loan, sometimes it's a gift, but that's also not very common. One other area where people, where people would turn is the overdraft. And look, I don't necessarily hate overdrafts, but I do think the way they are structured today do not necessarily help customers, right? It's kind of, oh, well, you have a 10-cent overdraft, here's a $49 overdraft fee. And so those are not, they're not products that are particularly user friendly, as opposed to a loan or a line of credit where it is very, very clear how much you're borrowing, how much you're going to
Right.
repay every single month or every 2 weeks or every week, and how much it will have cost you in total. I think, unfortunately, in the US, right, I don't want to make this conversation a Europe versus US type conversation, but
Sure.
I do think there's some value in it. We have very poor financial education in this country, right? Most people will not be able to tell you what an interest rate is. Most people will not be able to tell you what an APR is. You have to speak to them in terms that they understand. So regulators try to solve for this by creating the Truth in Lending Act, right? Or the Truth in Lending Statement that shows you an APR and that shows you a finance charge. Those are concepts that are not very graspable by most people, right? If you have a very nice fintech that shows you this is your payment, this is how much you're paying in total, that is a much more comprehensible product and much more tangible product, especially in that demographic, right? That generally tends to not be very financially savvy. So yeah, it's those are the products that they generally turn to. They're not particularly friendly and they don't necessarily help, right? You want to avoid those products that trap you in that cycle of debt.
Right. Well, I know, generally speaking, right, banking as a service bank or these partner banks work with a lot of loan originations partners, right? Based on the responsibility, right? Things that you just talked about. What are some of the things you personally will look for that say, you know what, I really want to work with that team. This is the right product for the right consumer. We want to work with them. The framework, the compliance, the understanding of risk and user experience is all there. Give us a couple of bullet points to the
It's a
audience.
very loaded question because
Your
you
dream
really
partner.
went. Or dream partner. When you look at a potential fintech, you look at them from end to end, right? You're not only just looking at the product that you will adopt as your own product, you're also looking at the team, at the staff, the founding team experience, their financial backing, their access to capital, especially in the lending side, right, or on the in the lending world. So when I look at the user experience, I want something that is very friendly, that does not take advantage of customers, and that
Right,
is through having the proper hardship programs, that is through having the
right,
proper disclosures, again, that are understandable by the customer, right? I'm not just talking about the
right,
regulatory, mandatory disclosures. I'm talking about the way the product is being
right,
presented, a product that is easy to use, and a product also that is tailored to the demographic it's trying to capture, right? And I'm looking at that point for two main reasons. The first one, obviously, is that I want to make sure I don't get a crazy high level of complaint. But the second one
sure.
is that I also want the product to be successful, right? When we work with those companies, I think a lot of fintechs almost forget that point. My success is very tied to theirs, right? I want this product to be successful.
Right,
When I look at a fintech, it is as if I am investing in that fintech. Or when I started working with the fintech, it
I
is as
see.
if I may not be writing a check, right? But they're taking a fintech slot. I'm spending time
Right,
adopting the product as my own. I am extremely vested in
that's right.
the success of the product, right? So it is critical for us to look at products that make sense for the market that they're trying to capture. Then
Right. Yeah,
on the
you,
funding, yeah, I was going to say on the funding side, or the funding team side, we obviously love entrepreneurs that have a history of success or that have worked in the space, but that's not necessarily a disqualifier. right? Some of the best companies that we've worked with came from people that had nothing to do with the financial space. They just had the right vision. But on the compliance and regulatory side, we obviously look for expertise, right? That's the area where a bank can get hit really, really hard. And we do work hand in hand with the compliance teams at the fintechs that we work with. So that compliance team is critical. And then, on the financial side, you want a fintech that's going to be in business a year from now, 2 years from now, 3 years from now. You don't want a fintech that is going to be leaving their customers high and dry, receiving
Right.
a notice from a backup servicer saying, "Hey, whoever you got a loan from went under, so please remit your payments to us now."
Yeah.
And you want them to have access to the right kind of capital to be able to grow their balance sheet, right? When you think of the fintech space and the fintech sponsorship space, banks will step in for the origination, adopting the fintech product as our own. Really, the fintech is here to give us advice on product management, right, and collections management. But at the end of the day, it's the bank's product. And generally the way it works is that the bank will originate those loans. We'll keep it on balance sheet, or we may sell it. And you want to make sure that there is an investor lined up to be able to buy that paper. So that is also part of what we look at
That's
as part of the due diligence. So my
that's
ideal
right.
my ideal product or my ideal fintech is one that kind of checks all of those boxes.
Yes, a lot of we talk to a lot of fintechs, and oftentimes they need to be reminded of that this is actually the bank product, right? The fintech team is, have some responsibility in marketing, customer service, product development, but ultimately is the bank's promissory note, bank's underwriting, bank's pricing. Um, that transparency collaboration is key, and when banks do take on partners such as, you know, there's 120 questions you got to answer properly, in addition to the right insurance, right protocol, right monitoring, third party monitoring, all that stuff needs to be there as well. Let's switch gears to the other more popular product, which is credit cards, debit cards, right? Any self-respecting bank partners will issue BINs, or bank identification number, issuing cards, co-branded cards on behalf of fintechs. Do you think it's sort of oversaturated a little bit? I feel like everybody has a card now. There's some good ones, big ones, and lots of bank partnerships. What's happening in that space? Is it that easy to do a card,
You,
Simon?
you would think so, right? I do think so. Look, if the question is there a market gap that is yet to be filled by someone? I candidly don't believe so, right? I think the market
Oh,
is very tapped. But I think
huge.
what there is,
Right.
yeah, the market is huge, and the market is very tapped, especially, you looped credit card and debit cards together, but really they serve two different purposes. So on the credit card side, if you look at the change in consumer behavior, people don't tend to carry balances on their cards anymore. That is an area where financial education works a little bit, right? It's people know that it is tough to get out of that cycle of debt, right? That could come
Sure.
with
Yep.
a revolving type product.
Right.
But there is still room for innovation, in my opinion. It's innovation that is a little bit more limited than it's been in the past, and maybe a better user experience, and maybe a better reward system, and maybe a card that is helping you build your credit, right? That doesn't require you to fully secure the line of credit amount, or the amount that you make available to the customer. So there's it's the response is interesting because it's not necessarily that there's more market to grab, but there's some market to replace, right? I think it's more of a replacement technique than acquiring, customers that never had a card. Then on the debit card side, it's kind of the same story, right? But you have to look at the history of fintech as a whole. 08, 09 happens. No bank in the country is giving loans anymore. Boom, you have the rise of marketplace lending, right? At the time called peer-to-peer lending. Then why did people keep their banks? It's because they wanted to have that relationship, right? Oh, I have like a financial shortcoming. I'm going to go to the bank and apply for a loan. Oh, I need a house. I'm going to go to the bank and apply for a loan. That financial relationship was extremely important. But then 0809 happens. You don't necessarily need to go to the bank anymore to get a loan. Like you can just do it online. At first, it was only personal loans. Now, virtually, you can get any sort of loan online. So
Right.
now you look at what is really engaging customers to stay within their legacy bank relationships, right? Well, you have some customers that have a bunch of cash, or they have businesses that are cash intensive. Well, those
Hmm.
customers are going to stay with the legacy bank, right? They need to have a way to deposit cash, and those customers generally don't trust going into a 7-Eleven and depositing cash, right? That's what a lot of fintechs do. But you do have the majority of customers that would not feel a change by going to a bank that was 100% digital. And as a matter of fact, they would get more features out of a bank that was 100% digital. Just look at early pay access, right? Or early wage access. Legacy banks, not a whole lot of them give you your paycheck 2 days ahead. On the digital bank side, it's become an expected feature. The risk is the
Right.
same, by the way, for both the legacy bank or the fintech bank, and that is a feature that is appreciated whether you're making $120,000 a year or whether you're making 30 grand a year. Everyone loves having their
Yep.
paycheck early, right? So you
Right.
do have kind of those limited additional features that are engaging people into moving digital. Now there are some people that are never going to trust, the digital space. They'll keep going to the Bank of Americas and the Wells Fargo's of the
Right.
world. But I do think there's a good chunk, especially of Gen Z, that is now entering the workforce and making a pretty good living,
Right.
that will bank 100% digitally.
Right. Well, FinWise Bank is FinWise Bank itself is a big commercial bank. Um, and I've noticed that a lot of bank partnership banks, they're all right deeply entrenched in commercial lending, maybe real estate, um, and maybe SBA type of loans, right? So, and there's like with the new what is it, the big beautiful bill, right? With some of the new features that they came up with on writing off equipments and trucks and all that stuff. What is what is your perspective on doubling down on commercial lending, maybe commercial real estate, and some of the equipment leasing startups are coming out of woodworks because of some of the new legislation coming on the pike. What is your position on serving the 30 million, I guess, small businesses out there?
Look, I love commercial lending personally, right? I do think that the SBA has a place in a bank portfolio, but I do think that more traditional unguaranteed working capital loans also have a place. So we always look for fintechs that are working in the space. This is definitely an area or vertical of fintech that we're very passionate about, and for selfish reasons, because it's also easy on the regulatory side. But the same, it's almost the same narrative as the unbanked or underbanked portfolios on the consumer side. You can see the impact of a working capital loan very well, right? It's a very tangible impact. Those are loans that truly help businesses grow, and when businesses grow, it's always beneficial for the overall economy, right? So we're not necessarily doubling down, but we're kind of keeping the course of action, which is to look for those platforms that make sense on the commercial side. But you're mentioning the big beautiful bill of the Trump 2 administration. The equipment write-offs and all of those tax incentives are not the only thing that is in there, right? You also kind of have those caps that were placed on student lending. Everyone is going to have a different opinion of it, but the point is you now have students that are not able to get federal funding or federal financing to be able to go to school. And that is developing very interesting frameworks in the student lending space, right? Some student lenders that were struggling to get more business. Some student lenders that are now trying to capitalize on that gap creating by the Trump 2 administrations are actively working on it. And so I'm seeing some some really interesting stuff coming out of the student
Okay.
lending industry.
Okay. That's a hint for the market. Let the best, most creative folks to get in. You're absolutely right. I sit on a couple of boards at local universities, and it is doing a number to their matriculation numbers and things like that. So they need to be creative, work with private financial services companies to bring that student body back. Um, we sometimes talk to sponsor banks, in conjunction with our clients. Some sponsor banks will onboard 10, maybe 20 fintechs a year. Some does two, maybe three. Very selective, very opaque, very mysterious. Why is that, Simon? Just from your personal perspective, is it a capacity issue? What's going on there? Yeah.
It's I think it's a lot of different factors. So when you were asking me about my ideal fintech, I told you I look at all of those things, right? Well, all of those things translate into a ton of work. It's not as easy as looking at Figma screens and saying, yeah, I want to work with those guys. So you
Right.
do, it does take a lot of time to get a fintech in, and then it takes even more time to onboard the product and adopt that product as your own. So for some banks, they do want to be very careful in their approach to implementation and onboardings, and they'll do a few a year, right? They'll do less than 10 a year, call it. There's also, you kind of touched on it, some banks want to be very selective in terms of the fintechs that they work with. And candidly, rightfully so. We saw some pretty horror stories coming out of the fintech industry in the past couple of years.
Well,
So you do want to be
yeah.
careful who you get in bed with. It's a fintech bank relationship, to make it just very tangible for people, is a marriage. You want to make sure you're marrying the right person, and you want to make sure that if you have to divorce, it's not going to be an ugly one. So you do want to be selective on who you're going to be working with.
True.
Now,
Right.
the
That's true.
banks that, yeah, the banks that onboard, 20, 30, 40 fintechs a year, to me, they fall into groups. The first one are the humongous banks that have a ton of staff and that can support quite safely that sort of growth. I think there may be one or two that fall in that bucket. And the rest are the banks that are looking at fintech as a gold mine, right? You did really see, especially in like 2020, 2021, you saw banks looking at fintech as the new gold rush in America, right? It was like, say, easy money, it was quick money. I don't have to go out of my way to get a customer. The customer comes to me or is brought to me. They went all in, not thinking that it is actually an extremely expensive business to run, and it is a very risky business to run. You are being held responsible for anything that happens within that fintech product, even if you don't host the website, right? Because at the end of the day, the only thing that you don't do is host the website of the fintech that you're working with, or host the app of the fintech that you're working with.
That's right.
And those banks missed that risk, right? And are still missing that risk, unfortunately. I read a post on LinkedIn recently that was like, long gone are the days of banks starting a bank sponsorship business with 100 grand of budget. Well, that day never existed. You thought it did, but it never did, or it never should have.
Yeah.
And that is valid on the lending side the same way that is valid on the deposit side, right? On the deposit
That's
side,
right.
especially now, especially a few years ago, banks are fending for deposits, right? So a lot of those banks kind of saw those fintechs as being an easy way to get out of brokered deposits or borrowed deposits and get their own core deposits. Well, come to find out, those banks are not able to hold the sub ledger, right? The ledger of the actual individual's accounts. And then the fintech goes bust and they don't know who is owed what. Well, that's a pretty big problem, right? And we haven't spoken about FinWise specifically on that front, but one of the products that I've been working on for the past couple of years is a product that we call Money Rails. Money Rails is a payments hub, fully API enabled. You can access payment rails via API, essentially. One core component that I was not willing to compromise on was the ledger part of this payments hub. A lot of banks could have said, hey, as long as I hold the FBO balance and as long as I can track the FBO balance, I don't really care about the rest. That doesn't fly anymore. The bank needs to have a ledger of record, right? Which is why we implemented a way to have the FBO balance tracking as well as the sub ledger tracking. So it's banks that want to play in this space have to stop thinking that they're just FIs or that they're just a charter that they're just giving out to people. They're the real bank. They're going to be held responsible that way, and they need to have the tech stack to support that product offering that they're getting into. That's,
Right.
we talk about the regulatory side, but the tech stack is also critical to serve the regulatory side.
Yes, that's right. I mean, every transaction, every debit, credit, beginning balance, ending balance of any partner should be real-time ledgered within the bank because that's the bank's business. And unfortunately, a lot of consumers, we don't have to talk about that particular incident, are still licking their wounds and couldn't find their deposits, their savings.
Absolutely.
Sometimes they're $30,000, $40,000 just lost in transaction. I mean,
Absolutely.
that's a different podcast, but I'm glad you guys have this system to track everything down to the T. But talk about some other technology. I've heard so much about the FinView analytics program. If if you can talk about that at all, right?
So
To
yeah,
actually not just ledger and technology, but actually help these programs to thrive, right?
yeah, that was one of the core principles when we went into this sponsorship business now close to 10 years ago. We wanted to have the right tech stack to support those fintechs, right? I kind of, if you look at what happened prior to 10 years ago for bank sponsors that were playing in the lending space, that's what most people were doing at the time. They were getting spreadsheets of loans, right? And they were just saying like, no, does the spreadsheet look good? Great, I'll fund everything. Well, you're a lender, so you should probably underwrite every single loan that you're going to be funding, and you also need to make sure that you have the right reconciliation processes in place, etc. So when we went into the space, it was with the idea that we would graduate from the Excel spreadsheet and actually be API based, right? And receive all of the data that we needed to conduct our day-to-day operations via API. The secondary benefit of it's one that we had considered but not necessarily spent a whole lot of time on, is that we ended up collecting quite a bit of data on customers that could be served, on customers that couldn't be served. So that data is safeguarded at the bank and is looked at by the relevant teams. But that was definitely a benefit of being so tech forward 10 years ago. And now you fast forward 10 years later, when we decided to go into the payment space, into the deposit space, we went in with the exact same mindset of we'll build a tech stack, we'll build a compliance stack. When we feel that both are really, really good, that's when we'll go to market. And that's what we did, and it's proven to be a good journey so far.
I could just feel that when it comes to securitization, it's probably a dream. You could probably maybe just to press the button as opposed to juggling 10 years worth of Excel files and promissory notes.
Not having a whole lot of data that is always good to have.
Yes. We'll switch gears a little bit on BNPL, but buy now pay later. But let's talk about it from the perspective of some of the bigger, I guess, third-party BNPL players are now applying for their own banking licenses, sometimes in a hurry. And we just read that I think Wise, the payment platform, got their charter application denied. Why is there a rush? I guess another rush to get their own banking charter, and obviously some of them are doing okay. Some got their charter declined. What's the rush? Is there a window of opportunity appear somewhere for these fintechs to become banks themselves? And personally, I always thought that they don't want to be a bank. That's going to be a whole other regulatory headache they have to carry on while managing their business. What's your perspective on this?
There's a short answer and there's a long answer to it.
Okay.
The short answer is that there's never probably going to be another time like today to get a bank charter, right? It is realistically, it has never been as easy as it is today to get a de novo, or to even be approved for the acquisition of
Right.
an existing charter.
Right.
I think the longer answer is that fintech sponsorship or fintech bank relationships are not frictionless, right? You butt heads a little bit, but that's because you have a company that is tech forward, and generally companies are tech forward want to push the limits of what is acceptable by law and kind of love that gray area of the law. If something is not expressly prohibited, then it's fair game. Then you have banks that by nature have to be very conservative, right? Because again, they're the ones that are going to get dinged at the end of the day if anything goes wrong. So I think a lot of fintechs, kind of taking that or keeping that history in mind and those memories of friction and not being allowed to do certain things are like, you know what? Getting a bank is going to put me in control of my own destiny. I'm not going to have to rely on someone else to tell me what I can and cannot do. The fintech and the bank will be almost one and the same, and we'll figure it out
Right.
that way, and we'll see if those banks were right all along. Um, I
Right.
do think that this carries, and again, I think if you look at the history of fintech, again, fintech bank relationships, bring yourself back 12 years ago, kind of when I first started in the space.
Right.
At the time, we were talking about a fintech charter, right? The OCC was going to put out this fintech charter so that fintechs
Right.
could have access to payment rails, could be able to issue loans nationwide, and all of those things. It would essentially be an MSB and a lending license, kind of done at the federal level, right? Very similar to
Right.
the MTL that you have in Europe. Well, that
Right.
never panned out. That never materialized into anything. But I do think some of
Right.
those fintechs went into bank relationships or bank partnerships still having that thought in the back of their head, right? Of, well, we were promised that charter, and now it's feasible, right? Now, what do I think will happen in the future? And if I have any partners of mine that are listening to this and that are applying for a charter, I love you guys, but I do not think it's necessarily the right path right now. Those fintechs are going to go into those de novo charters with a much lessened or very lessened regulatory upside because of everything that we talked about, right? It's the current administration is the way it is. So I think they're
Sure.
going to build their banks under the premise that this is how it's going to be forever. It's probably not, right? Like the administrations and regulatory oversight is a pendulum. It swings pretty
Right.
constantly. So are they
Right.
setting themselves for success, by getting a de novo license, for which the sole purpose is going to be to serve the interests of the fintech? I don't think so, right? Like leave the banks to the banks, and you focus on product and marketing and optimizing credit. Again, this is not something that is going to be seen right now, right? Like I think they have like 3 or 4 more years of bliss. But if there's a pretty sudden administration change, that's something that they're going to feel pretty quickly. Again, this is all very anecdotal, but we as banks are expected to have an impact on our communities, right? We're not expected to be single trick ponies. Our regulators expect us to have a business plan that is well rounded and that serves as many customers as possible. And to that end, there's a ton of regulations, right? When you have a fintech that is applying for a bank charter today for the sole purpose of serving their existing product stack, that's a one trick pony, right? And in some cases, those fintechs don't even take deposits. So it's going to be banks that get broker deposits to fund loans of the fintech, like it doesn't work. It's not a well-rounded bank, right? Again, we may have another
Right.
conversation again in 4 years, Tim, and you may tell me, Simon, you
Sure.
were completely off base. But I do think that I could see it happen, let's say. So,
Right.
yes, you want to capitalize on the moment. I feel you. You want to live in the present and capitalize on what could be given to you. It totally makes sense.
Hmm.
Now make sure that you craft if that is the path that you're going to go down, make sure that you craft a strategy that can withstand the regulatory tests of 3 years ago, but also the ones of today, right? Don't think that today's
Right.
situation is going to be permanent.
Right. Yeah. They may think that this is a de-risking strategy, but it's gonna come back and rear its ugly head, in two, three,
To,
4, 5 years or whatever it might be.
right. To me, the
Mm.
biggest risk in business is not knowing what the future holds, right? And in that very specific situation, I do think that a risk is very much exists, right? It is not something that you can turn a blind eye on. The
Yep.
chances are things will look very different 4 years from now than they do today, and you don't want to get into a
Right.
position where your de novo license is now getting MOUs or consent orders. All of those things are public, right? And some of those fintechs that are getting bank charters are also publicly traded. So, like, does this whole strategy make sense? Like, does carrying that risk make sense for your long-term equity incentive? I,
Yep.
I, I fall into the
Mm.
school of thought that it doesn't, right? Like I don't think I
Yeah.
would take that risk if I were in those fintechs shoes. But those fintechs could criticize me and tell me that I'm biased because I work for a sponsor bank. So I would hear the argument as well.
Yeah. I mean, American Airlines has been doing their co-branded cards for 50, 60 years. They never
Exactly.
became a bank. I don't think they ever want to be. Their business
Right.
is already complex as is. Yeah.
Right.
My word. I mean, almost an hour has gone by, Simon. We can talk about this for the rest of your evening, which is already an evening time. So thank you so much for stay on past the regular working hours in South of France on your vacation. Thank you so much, and it's a truly pleasure to have you on board this podcast. We'll get this all tuned up. Any parting words for new fintechs that wants to get into the space? Give him some hoorah, Simon, if you will, for all the entrepreneurs listening to this call.
Be innovative, be compliant, definitely embrace what current innovation is throwing at you. I'm, uh, I'm unfortunately not seeing a whole lot of fintechs taking advantage of those new tools that are made available, right? They're using it for back office functions and whatnot, but I'm not seeing it become part of the front end user experience. Embrace it, right?
Right.
And yes, banks will have questions, but as I said, if you're successful, we're successful, so we have the right incentive to work hand in hand.
That's right. Yep. We heard it. There's a lot of opportunities in that space. We haven't touched upon crypto. We haven't talked about uh, um, USDC. We haven't talked about anything around payments. We'll save that for next time, next episode, Simon. But thanks for, again, thanks for being on the podcast. I appreciate you.
Thanks for having me, Tim.